We're very pleased to have a very distinguished panel this afternoon. We have Chairman Duncan Clark, who is the chairman of BDA, and also Professor Manchanda, a professor of Ross School of Business of Michigan University, and also Professor Fine of the Business School of University of Washington. For their bios, I would refer you to the bios of each one of them in the handout. And so first, we'll have Chairman Duncan Clark to start.
So I've been based in China since '94, so this is my 20th anniversary in China, which means I'm not there that much because I need to keep at least one lung. And so it's great to be here in fresh air, New York. During that time, the technology landscape in China has transformed. I moved there from Hong Kong in the summer of 1994 when there were 200,000 cell phones in China. And they each cost about $3,000 and they were as big as this computer almost. Things have changed, clearly. Some things haven't changed as much as we would like, though. Perhaps even some of the stalwarts of the Chinese economy, the state-owned enterprises, have been remarkably resistant in some areas. But what we're talking about today is technology's effect on finance. And now even the banks, even the Chinese state banks, are being affected by the internet and all that has brought. So we'll talk a little bit about that. I mean, as we've just heard, I think Andrew pointed out that China is both a developed and a developing country in terms of its technology landscape. I liked his analogy of speaking into, like, having a personal relationship with Baidu. So even today, much as though China is almost 3 times the size of the US internet population, it's still only, not even half penetrated. And so there's still a lot of growth. We tend to sometimes think that China's peaking. We've heard certain points about China peaking, and in certain areas, yes, in coastal developed areas, yes, we can start talking about that, but there's still a long way to go, and particularly mobile is driving things forward. And yet, so even if we look at the e-commerce market, even though China's a long way from peaking in terms of internet penetration, China's already the largest e-commerce market in the world, and more people use mobiles to access, to buy and sell things or buy things online than they use their PCs, significantly more than the US. So e-commerce in China this year is about 12% of total consumption. And of course that consumption is growing very rapidly, partly because of e-commerce. It's making it so much easier for Chinese consumers to buy things. People forget how awful it was, or it can still be, as a consumer in China to walk into a department store and firstly have to find the good that you want, make sure that it's the real thing, it's not fake, then figure out how to pay for the thing, pick it up. There's no trust in China. I think the rarest commodity in China is trust. In fact, if you're in a hurry in China and you want to buy something in a store, even if you hurry your way through the payment, go pick up the good, the sales clerk will immediately start opening it to prove that it works, because most consumers have to try something to make sure that it's what they really wanted and that it's actually functioning. I think we can use the same analogy for finance, that in terms of their savings and the way and their relationship for Chinese consumers, be they individuals or companies with banks, it's a very, very low bar. I mean, it's not a pleasant experience to line up in a Chinese bank at lunchtime. You won't have lunch by the time you get back to the office. You'll be. Things are beginning to change, and I think one of the interesting things why Chinese banks are changing is the impact of technology. So, but let's go a bit deeper than that. Let's just look at the corporate world. So, in one survey for the World Bank and some other broker research we looked at, that actually the small and medium-sized enterprises in China are chronically underserved in terms of finance. By this estimate, 86% of them are sort of underserved or failing to meet their needs. And the reality is that Chinese state banks are state banks. They lend to state-owned enterprises because the party secretary plays golf with the party secretary. It's one of the most difficult nexi to break, is the lending habits. There's been some interesting things we'll talk about, some dramatic things that are beginning to happen in China. But for small and medium-sized enterprises, very often they've never received any kind of finance. There was never any established credit mechanism. And the importance, therefore, of companies like Alibaba in actually beginning to extend credit to SMEs and even individuals in some cases because they know them from their personality, their behavior online. That's a huge difference from the state-owned banks who never really would even meet or care to meet these individuals. So versus Russia, Brazil, and other countries, China is still far behind in kind of SME financing. Why? I mean, banks, as I mentioned, have overwhelmingly favored the state-owned enterprises. And this is part of the, as you know, in 1973, this was termed financial repression, where Chinese consumers get a very raw deal. Typically, their banks are actually giving them low rates of interest, and they're being used to subsidize, often very low productivity SOEs. There are alternatives that have popped up, such as microcredit institutions and pawn shops, but they're highly fragmented and localized, so the available pool of capital is limited. Now, there are signs, as I just mentioned, that we're beginning to see some important shifts, tilting the balance back to Chinese consumers at the expense of Chinese banks in terms of that spread, effectively. So there is optimism now that reform is really now beginning to tackle this thorniest area, which is the state banks. I just wanted to look at one area which, frankly, has been subject to some ups and downs, but the peer-to-peer lending market, which actually originated in the UK initially, but in recent years we've seen a huge expansion of lending, P2P lending or peer-to-peer lending, even outstripping the growth in the lower right, wealth management products, which Chinese banks have started, as I mentioned, to innovate, and also these microcredit agencies. I'm not going to go through all the slides, but I'll make them available for people who want to dig into this area. I think what's important about this is just this is an important example of how technology is impacting finance. Again, this is not a smooth picture. We see bankruptcies, we've seen scandals. That's a part of any innovation in finance. But before I dig more into P2P, I think, again, we have to come back to Alibaba and their launch of Ant Financial. It's an affiliate of Alibaba, and of course we're getting into those murky areas we talked about earlier, who owns what, when, how, and VIE, as we've heard. But this is actually not. This is a domestic company, and as Lucy Peng, who was one of the original co-founders of Alibaba, said that China has never been lacking in banks. It has 200, but we have an opportunity to use internet methods, internet technology, internet thinking to disrupt traditional finance. As you know, Alibaba, by want of Alipay, is already hugely important in the Chinese financial system in terms of the consumer economy. In addition to Alipay and the Alipay wallet, there's the Yuebao that we all heard about a lot, particularly a year ago. How much Chinese consumers were rushing to Alibaba and also Tencent and some other players because they were getting no joy in their local bank. They would get sometimes up to twice or even more rates of interest by putting their money, and Yuebao means leftover treasure, it's sort of surplus to requirement, putting that with the internet players. Now, there's been a pushback from the banks who are calling on the government to limit the amounts, and which has happened, that people can put into these accounts. And it's been interesting how Jack Ma, even, much like Rupert Murdoch occasionally makes ill-advised tweets, Jack Ma, will post on the Laiwang, which is the kind of the Weibo of Alibaba, which nobody except Alibaba people use. But he's made some very strident comments against Chinese banks and how we need to take them down. And so there's clearly, Jack is a very ambitious man, and the banks are probably the most tempting target in China ripe for reform. Some have valued this unit at over $70 billion alone, and Alibaba has a third of that company, although it's not in the parent, so we have another interesting discussion there. But anyway, so Ant Financial, and the reason of Ant, I don't know if you know the concept of these ant cities that exist outside China. If you go up north, maybe 30 minutes from Tsinghua and Beida University, you get into these dormitory communities where self-described young people, they call themselves ants because they're like living on an ant hill. They have, they're really, they're working in nominally attractive jobs, but they're struggling to make a living and make rent and things like that. So there's now this pride in being an ant, you know, and this is, I think, the choice of, you know, by working together, you know, in large numbers of small individual sort of things, the ant can take on the, you know, the sort of the giant, if you will. Anyway, so an important development, I think, and similarly looking over at Tencent and others who are leveraging their massive distribution, big data aspects of their business, and credit, you know, knowledge that they are building every day. Back to peer-to-peer, we've seen a big expansion of some of these institutions. You could look at the current range of products that have been offered, certainly to corporates and consumers in China, as being very limited. One of the reasons we see this real estate bubble in China is that people had such low rates of return from their investments. Why we're seeing real estate bubbles, partly the New York real estate bubble, I think, is largely going to be fueled in the future by Chinese buyers. Particularly now we have this 10-year visa available. I think you should all grab any real estate you can, because the Chinese are coming. I'm a Brit, but it takes a Brit to say the Chinese are coming, because Paul Revere is being replaced now. But the fact is that, you know, increasingly entrepreneurs in China are looking at ways to service this underserved demand. And if we were to compare, you know, financing of small enterprises in the U.S. with China, that we estimate this market could grow by 30 times in terms of peer-to-peer lending as opposed to today. So, and if we're looking at trust products, I'm not going to go into all the details here, but even greater. So there is huge underserved demand. Jack Ma famously likes to talk about an individual. This is a slightly different topic, but in terms of internet finance, people who are using Alibaba to apply for loans. And he talks about one individual customer of Taobao who had applied for a loan for 1 yuan, 1 kuai, you know, which is whatever, 15 cents. And he asked him, you know, why on earth would you apply, you know, for such a small amount? He said, never in my life have I ever been extended credit. I just wanted to feel what it felt like. So there's this sense that untapped demand. There are different forms of peer-to-peer lending. I'm going to leave these in the slides, but there are some that are more pure information platforms. There are those that actually involved in assigning loans, and there are those sort of somewhat in between. So, you know, this is financial innovation that's happening, as I said, with bankruptcies and chaos from time to time, but the demand is such that there will be these and other type of, you know, gray market lending opportunities. I'm going to leave these for you for later. Obviously, there are varying amounts of legal exposure to these companies. I'm leaving you some stats on who these people are. We look one, in this case, Dianrong. And these companies are beginning to attract, some of them are significant amounts of venture capital and private equity investments into the hundreds of millions of dollars. So these, you know, they may merge. Probably 80% of these peer-to-peer companies will disappear, but they are, the business will be here to stay. And, you know, the Financial Times earlier this year was talking about how there is this kind of Darwinian shakeout happening. Because one of the big challenges we see in the internet finance, as we see in any area related to the internet in China, is the speed with which one company can copy another company. One of the reasons we're seeing Chinese investing in Silicon Valley to buy IP or to buy companies is to somehow escape from this, I think you described it also, that this white heat of competition in the Chinese market. It's so intense, and this has been the case in this peer-to-peer lending. So it was interesting that the Chinese central bank last year said it would closely supervise these peer-to-peer lending websites and reminded companies that illegal lending practices, such as investing their clients' money in financial products, were punishable by death. So there is always that risk of intervention, but it's clear that the Chinese government has been courting increasingly internet players as a means of prodding forward recalcitrant, you know, state-owned enterprises. If you think back 12 years ago or so to the WTO accession, 14 years now, 13 years, the Chinese government was using the specter of WTO and foreign competition to really drive some innovations. They tried that with the banks. Today, foreign banks in China, I think their collective market share is 0.5% of the market. But there was a lot of talk 12 years ago, 14 years or so, of how HSBC and Citibank would be on every street corner. It never came to be because the Chinese banks have found ways to ensure continued policy support and so on. But I think now the government is looking at the internet in a number of areas to drive reforms. It's actually much more effective. One, because it doesn't make the government subject to criticisms of not representing national interests. If you're benefiting a foreign group, that's never good in this current climate. But also because I think the internet is actually, as we've seen, a range across e-commerce, finance, and other areas, we're seeing the power of these companies to affect change.